Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, we've had some downward movement, and then this week, past week, a little bit of upward movement, but let's get into it. First, taking a look at the S&P 500. So we had an ending diagonal pattern into the top. We formed a possible head and shoulders top. Left shoulder, head, right shoulder, neckline is the black line. We had a slight break. That must have been Monday, but we're able to regain it by the end of the day. We had a bearish rainbow convergence, and prices were able to jump above that on Friday, putting uh, a little confusion into the bearish outlook. So when I went bearish, this was the place I went bearish, and I put my stop at the recent December high, and I think it was about 2.5% risk on the upside if prices went to a new high, and I think the potential for a downward move is substantial. So, going to maintain the bearish outlook and seasonality says we still have a few more days of a down movement before we get some sort of a rally into February and then some more downward movement. Now, I'm showing this. This is not, I don't expect this to follow uh, seasonality to the T, and it's just a tendency, and it's something that I'm looking at, and I just wanted to share that with you since I did the first time when I went bearish back here. And so we got a couple more days of downward price movement according to seasonality. So let's see what happens. In the meantime, there's a few a few buy recommendations that are still holding up. Silver was the newest buy recommendation. And this is, again, commodities have been strong. Silver was a recent buy recommendation just a few days ago. And this is the big picture on silver. You're looking at a 14-year symmetrical triangle. So it's a gigantic pattern. And if prices can maintain this breakout of the resistance line, the price projection is 77, and we're currently at 31.50. So it's about 130% upside, potential upside. So silver is very volatile, very hard to trade. But because of the reward to risk here, I think that it merits a try at silver. So, you know, gold probably has half the volatility of silver, maybe not even half, but the upside potential here in silver is enormous. And when I look at the point and figure chart, the least subjective type chart, it's just a strictly supply and demand. It's nothing I drew, it's nothing I created. We got a bullish trend line in place. And based on the breakout back a couple months ago, we have a $51 price projection, which from 31 is a long way up. So our stop is if we break this bearish trend line, this bullish trend line, then we will exit silver. But if not, the upside is 51, according to the point and figure chart. According to my chart, uh, over 70, 77. So I like silver a lot. Copper, another metal that I'm bullish on and have been bullish on. And this is the big picture on copper. Again, this is a 14, 15-year pattern. This has not broken out yet. Like silver has already broken out of its 15, 14-year pattern. Copper has not yet. Copper was able to break out of this smaller pattern, which is not small. It's about 2 years, was 2 years in the making, which got me involved in copper in the first place. And we rode that up, and I suggested selling that up here at the top. And now I've been bullish again. And so let's take a closer look at this part of the chart, last three years. And here's the triangle. Here was the triangle breakout down here. Here we went neutral, tried to get long again, got stopped out for a small loss, got bullish again, and now prices have come back to that level. And so I like the fact that prices were able to break above the bearish rainbow convergence. So copper looks good. I'm looking for higher prices here. Excelon, another chart that looks great. This is a utility company. Excelon, I want to say it has a 5% dividend. It's a very large dividend. And you can see the 2 year descending triangle with a descending resistance line and a flat support line. Prices have broke out, come back, retested that, and then last week it had a massive move of 5.6% on the upside. The price projection based on this pattern is 51. So we're at 39.42. So we got really good upside here. We still have our stop down at 36. Still like Exxon a lot. China. China had a slight break 2 weeks ago of its stop. Again, this is something that just blew off the map on the upside on our inverse head and shoulders pattern, left shoulder, head, right shoulder. Broke up, shot out of a cannon. I was on probably every other day saying sell a little, sell a little, sell a little. And now we've got a retest of that breakout, had a bounce up, and now we had another slight break 2 weeks ago. And then this week we powered up 6% to the upside. And so still long FXI, the iShares China large cap ETF. And the bigger picture on China and the Shanghai index shows enormous potential. So we'll see if FXI, which doesn't track the Shanghai index exactly, it was traded here in the US, can follow suit. Microsoft. This has been dicey. So the long idea on Microsoft, not only bullish on Microsoft, but also would give us a kind of a yardstick on the overall US market. If the market's going to go higher, Microsoft's going to go higher with it. And you can see this is not a big pattern. This is on a daily chart. So each one of these bars is only a day, whereas the Excelon chart was each bar was a week and it was a 3 year chart. So to give you some perspective, this is only a 6 month pattern, but the upside potential was good. Market went down, Microsoft went down, almost broke our stop, not quite. Formed a bearish a bullish hammer, has bounced up. We had a bearish rainbow convergence, and prices last week broke out above it, and at the end of the day, barely hung on to being above those that confluence of moving averages. So it is holding there, but it's certainly not very decisive. So I'm still have a buy rating, and actually our stop is down here at about 412. So, um, cautiously optimistic on Microsoft. And again, I like it. It's a barometer for us. It's going to tell us which way this market's going to go. Last chart is platinum. Again, the third metal that I've introduced, and platinum is probably is third on that list. It's not. It certainly isn't behaving like other metals, so it's making me cautious. I'm putting it at the end because it's a less conviction buy that I have. And again, we got a 3 year uh, um, symmetrical triangle, but we're still in that triangle, so prices are jumping around back and forth, and we have this bearish rainbow convergence, which whereas copper was able to break through, platinum has not yet. So I'm maintaining my buy. I'm not adding more at this point. I want to see it get above 88 on a weekly close, and then that would give me more conviction in this idea. And our stop is still down at 82.5. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Good trading to you this week, and adios.